Good morning, everyone. It is 8:02 a.m. Chicago time on Friday, the 28th of October, 2016. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. I'm sure all of you have heard the strong GDP number that was just released at 7:30 Central, 8:30 Eastern. The annualized GDP Q on Q came in at 2.9% versus 2.6. Personal consumption 2.1 versus 2.6%. Strong GDP number there. In addition, uh, Japan's deflation, consumer prices in Japan fell 0.5% year over year in September, matching the largest drop since March of 2011. That drove a portion of the overnight trade, pushing the S&P 500 down to 2116 on the overnight low, which is lower than last week's low. Amazon's earnings also tumbled, or stock also is tumbling or has tumbled due to earnings, 52 cents per share, below the 78 cents expected. And of course, Google beat at $9.06 per share on revenue of 18.3 billion, and is buying back $7 billion worth of stock. So those are the drivers here in the overnight session and since yesterday's close. Let's take a quick look at what we're expecting for today. This morning, we're looking for University of Michigan sentiment final at 10 Eastern, expecting 88.2. This number's for October. We have the Baker Hughes rig count at 1 this afternoon, 1 Eastern. And then as far as speakers, the calendar's clear. Not seeing much on earnings after the close today. Pre-open, we got Exxon and Chevron. So, yep, that's about it. Let's switch gears and look at yesterday. Yesterday, we had a market that was gapping up. The expectation, the primary expectation of the market was to behave as it normally does on a gap up in balance, is to make an attempt towards the prior day's range, potentially push through by a little bit. The expectation is it would push through to about 38.50, the high volume node from the prior day's high on Wednesday, consolidate, and then to start pushing up towards 44.50. That was what was expected on the primary plan for the day. Secondary plan, to continue the rally from the overnight, push up through the overnight high, which at the time was 43.75 towards 44.50, find sellers, and then rotate back down and into the MC point of control, which is at 35, 35 or 35.50 or so. The primary, the tertiary idea was for an open drive on a gap up. Whenever you have a gap up out of range, especially out of balance, which did not match this case, you have a higher probability of a higher time frame participating in the market. And in this situation, given the trend being down, and the fact that we have the MC point of control below us and it's been thoroughly tested, the expectation was for it to open, to have an open auction or an open test drive down and then push up and drive up towards the 52, which of course didn't happen. This is what we got yesterday. Actually, the opening swing is up here to 37. So what we saw yesterday is pretty straightforward. We did see some pretty strong selling coming right off the open, but we had an open test drive, so it opened. It made a quick attempt higher, and then we had a drive immediately on the open down to 37. The 37 is our potential opening swing low, and we don't know if it is until it retests, and there's your 37 again. So there's the 37 against the 37. That confirms the opening swing low, and then the market pushes down into the prior day's point of control right there, and bounces up just about 9 ticks, and then continues lower. So it has the prior day's value is not valid. You can see that the prior day's value does not show consensus. It's a three-pronged profile, and therefore by definition there is no value. It was seeking value and couldn't find it. Just because your charting software, my charting software, is painting value on here does not make it so, okay? Because it's just operating on a formula without context. And so it continued all the way down to the other side of the prior day's high volume node, which is the 3-day high volume node as well, the lower part, and then it started to float up. This IB, I posted some IB stats on Twitter yesterday. This IB is 15.5 points, which is higher than what we would consider to be the norm for an IB stat. And so IB range stats for the last 1,000 days, the most common IB range, IB high to low, IB defined as the first hour's high and first hour's low. The most common range is actually 5 points, and the normal range is up to 11 points. 15.5 points is outside of the first sigma or the first standard deviation, and 19.25 points is the second standard deviation. So what we have is an extra wide uh, IB, and just as I wrote yesterday, in fact, I'll show you the tweet here. It's just much easier. There it is. Just as I wrote yesterday, 19.25 points is the second sigma of IB range. And then I followed that up with a comment that if we have an extension, there it is. Oh, what did I do? Hang on, let me get that again. There it is. And I followed it up that if we have, this is higher than normal, likely to balance inside, and that's what we did. Let me get rid of this stuff on the screen here. All right. If we balance inside, we're likely to balance inside. Extension lower, likely to be small if it happens. I want to remind you again that there is a stat that says there's a 97% probability that the IB high or the IB low is likely to break. Again, that stat goes back actually more than 1,000 days. I think it's 1,400 or something. There's a 97% probability that we'll break the first hour's high or low by the end of the session, and it took forever. So in yesterday's S5 webinar, I talked about looking for failure below this 30 quarter and consolidation for a move down to the IB low to play on that 97% stat, and the market goes right to the IB low, pulls back up to 29.50, just below the 29.75, which is the consolidation low, and then it finally breaks on the close. The market is fairly balanced yesterday. The value area is valid. We're inside of that value area currently, and we ended up taking out yesterday's low anyway. So this played hypo 2. This played hypo 2, but it pushed a lot farther than I thought, and it did not pop up. It played hypo 2's general scheme or push on the downside, but really it did not, again, 2 days in a row now, it did not fit any particular hypo. So that's where we were yesterday, and a fairly interesting trade. It did hold some intraday levels, but there's been a higher time frame um, in action lately, and it's been running through the day type levels pretty much every day. As we expand this 3-day profile to see where we are, we see that we have just uh, resumed what we were doing for the last 3 days to the downside, except we put in a higher high with a lower low, a total bearish engulfing day. And if we expand the higher time frame profile to see where we are in the overall picture, we see here that overall we're just not really accomplishing very much. We keep hanging out at this 2135 area and just whipsawing around it. The market's completely imbalanced and waiting for further information, potentially the election news, this coming election. So that's where we are. As far as the overnight, here's the overnight. Traded fairly imbalanced on the open. Kept to the to yesterday's close, and then with the European Open, it dropped. A lot of news out of Europe this morning, and I believe it was what was it in Europe? It was there was a GDP across the board, CPI across the board, France, Spain, Netherlands, um, and the numbers were all over the place. European consumer confidence came out this morning as well, and so on. And so the market is mixed this morning in its allocation as far as risk or safety. It's mixed, and what this is it's a sort of a W bottom here. If you look at a smaller time frame, the market's swiftly rejecting these lower prices and hanging on to the morning's range, and this portends a push, a continued push higher, looking for 2131.75 to be tested this morning. So let's wrap it up. I have 1 minute left. So the expectations this morning: opening in range, just out of value or just in value, expecting an open auction on the first hypothesis. I'm looking for this to test lower, fail, and then turn up towards 2131.75, and then eventually trade sideways to test towards 2135 again to continue this chopping back and forth balance range. That's the primary hypothesis. The secondary hypothesis is an open that continues to the overnight high, breaks the overnight high, gets close to 2131.75, and then rotates down and starts to drift down towards 2120.50. Again, that is the better play. The better play is for selling to balance off some of this, to move out of balance a little bit, and to create a better for the market in general, to create a better base for a rally if it is going to rally. And don't really care if it does, but generally we continue as we push through, yet keep coming back to the same areas and going on a downtrend. The market is attempting to rally, but it's not able to sustain buyers at higher prices, and so it needs lower prices to be able to complete that. Same if the market keeps pushing higher but selling off, and then keeps pushing higher and selling off. Essentially what it needs to do then is to continue to a higher price, to the point that there are no buyers at all, and then it'll rotate down, and then you have a strong solid move down like we had last month. So that's where we are. Again, just remember that it's better to wait. It's better to wait it out and find an opportunity that screams at you than to stick your neck out right at the open and spend the rest of the day trying to salvage your day. Remember, it's Friday. It's not the best day to go out there and be a maverick, burn a hole in your pocket, and spend the whole weekend upset about the fact that you lost money today. Good luck, and I'll catch you on Monday. Take care.